Hi, I'm Byron Udell, founder and CEO of AccuQuote. Today, I'm going to talk about something the life insurance companies don't want you to know. In case you didn't know, life insurance companies make a lot of money. In 2014, for instance, the industry made $133 billion. And how do they make all that money? Because most of the time, they win the game of life insurance. What does that mean? Let me explain. Let's say you buy a permanent life insurance policy at age 45 with an annual premium of $8,000. What if 10 years later you get divorced or some other major lifestyle change occurs that prompts you to get rid of that policy? Now let's do the math. You paid $8,000 times 10 years, so the insurance company gets to keep $80,000 of your money and you get nothing. Profitable for them? I'd say so. Or let's say you buy a 20-year term policy at age 40 with an annual premium of $892. You faithfully pay your premiums for the entire 20 years. Now, at age 60, they jack the premium up to over $20,000 a year. So, of course, what do? You drop the policy. Again, they win and you lose. After all, they've collected nearly $18,000 from you, and they didn't have to pay out on any claim. You see, life insurance is a financial game. And like with many things in life, there are winners and there are losers. And you will lose big time every time if your policy lapses before you die. But you can win every time if you do one thing right. This is the secret of winning the game of life insurance. Are you ready? It's very simple, and here it is. 6 little words. Die with your policy in force. It's the people who buy and then drop their policies prior to dying that subsidize the returns for those who are smart enough to die with their policies in force. Remember, the odds that you're going to die at some point are 1 out of 1. So I figure you can handle that part. It's the last 5 words of the secret that are a little bit trickier. If you want to win the game, you have to die with your policy in force. Let's look at the math if you do that. Say you buy a $1 million permanent life insurance policy at age 55 with premiums of, say, $10,000 a year. If you live to age 85, you will have made 30 payments of $10,000, totaling $300,000. When you die, your family gets a guaranteed $1 million tax-free for a net gain of $700,000. The numbers just don't lie. That's a tax-free rate of return of over 7%. That's equivalent to earning well over 10% on any taxable investment, maybe even more depending on your tax bracket. Or let's take a woman, age 43, with a $500,000 permanent life policy, paying premiums of $2,500 a year. At age 86, 43 years later, she would have paid $107,500 in premiums. If she died that same year at age 86, her family would receive $500,000 tax-free. That's a net gain of $392,500. Again, a ridiculously high rate of return that simply cannot be matched by any other safe, guaranteed, predictable financial instrument. So you might be asking, how does this work out for the life insurance company? Well, like I said before, it doesn't, at least not on the people who die with their policies in force. The insurance companies make their money on the people who drop their policies before they die. Those folks subsidize the returns for those smart enough to die with their policies in force. And that's what the life insurance companies won't tell you, and they don't want you to know. When they win, you lose. When you win, they lose. And since you know you're going to die, you can guarantee a win if you can just find a way to die with your policy in force. It's not that hard to do, but so many people don't do it. Obviously, you have to own a policy that you can afford to keep until you die. and it has to be one that won't force you out with higher premiums when you get older. Rich people, well, they figured this out a long time ago. For years, they've always been the ones buying the biggest policies. Even folks so rich you might be thinking, what do they need life insurance for? You want to know why? The fact is, wealthy people are usually pretty good at math. They've crunched the numbers and they know that life insurance delivers some of the best returns and is also one of the safest financial instruments you can buy, period. They also believe in diversification. Every financial advisor does. How can anyone consider themselves diversified if they don't own one financial instrument that can beat a bond portfolio if you die when you're supposed to, and absolutely crushes every other financial instrument on the planet if you die before your time, which happens to people a whole lot more often than so many of the other risks we routinely build our portfolios to protect against. To learn more, just give us a call. For over 30 years, AccuQuote has helped hundreds of thousands of customers save money and acquire over $100 billion in life insurance coverage. We work with dozens of the most competitive, top-rated, brand-name life insurance companies that you know and trust. And we'd love an opportunity to earn your business. Just call us at the number on your screen or go to AccuQuote.com. I'm Byron Udell, and thanks for listening.